Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense to you. And we'll go over some ideas in that regard within the order window of our web trader and the AvaTrade app. It makes it pretty simple to do the risk management. It calculates your exposures for you as you adjust your trade size and your stop loss, etc. So we'll go over some examples in that regard if we have time and find some trades to set up. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both the MT4 and MT5 trading accounts from one location, but with the ability to use all of the advanced tools that are not available from the MetaTrader platforms and apps. And so whether you're trading on our app or on our web trader, you'll see the free signals, the technical analysis breakdowns, also the fundamental tools are there as well in both the app and the and our web trader platform. And so whether you're on MetaTrader 4 or 5, from mobile and from web trader, you can make use of all of these tools. Now, if we log in from the upper right hand corner here of the website, we'll be in our web trader platform. It probably makes sense before we jump into the technical analysis of things, which is the main focus of this session. I think we should talk a little bit about the fundamental news because it's definitely pertinent to what we might expect to see in terms of volatility on the charts and maybe even directionality as you might see it. And so really what we saw today was weaker than expected data. First, I believe it came out of the UK. CPI data, PPI data out of the US. There was weaker than expecting housing data. So we had weak data out of the UK and out of the European Union, and then out of the US. Some weaker than expected data. So that's kind of raising maybe the anticipation now coming later in just a couple hours time. The FOMC committee out of the US will be announcing the rate decision, and the expectation is the US is going to cut the federal interest rate again. The expectation is by 0.25%, so 25 basis points. And maybe that expectation is even higher now that will happen because of the weak data that we saw really almost globally, but also out of the US as well these past days and weeks. And so it'll be interesting to see maybe more so not just if the rate cut happens, which usually it comes in at expectation. Sometimes it's a little different. Maybe they would do a 0.5% cut, 50 basis point cut rather than 25. That happened once recently, by the way, in the US, which then could have a larger reaction. A larger cut than expected would probably lean towards the US dollar weakening. If they chose not to cut the rate at all, that would lean towards probably the US dollar strengthening quite rapidly. But assuming it comes in as expected with a 25 basis point cut on the interest rate out of the US, the focus then will be more on what do they say in the press conference. Because if the rate cut is kind of built into the price movements that have already occurred, we saw the US dollar give ground to the, the US dollar give ground to the euro and then some pullback recently. If they come out and talk bullish, that maybe there shouldn't be more rate cuts moving forward because maybe the economy is too strong and that sort of thing, then that could serve to strengthen the US dollar, and vice versa. If they come out and talk dovish about the economy and say that there's need for further rate cuts and that they're not worried about inflation being too high, then you could see maybe the equities react to that in a positive way if there's anticipation of even more rate cuts out of the US. By equities, I mean the stocks, the major indices. They tend to cheer any talk of more rate cuts because that makes the cost of doing business cheaper, basically. So those things we'll keep in mind and understand that there's a lot of volatility to come between now and the end of this evening and going into tomorrow because of this rate decision and press conference out of the US. Okay, so now we can jump into the technical analysis of things. And a common place to go would be something like the Euro USD, and just to see if there's a technical signal from Trading Central on the Euro USD. And I see that there usually is. So if we click on this symbol, we'll load the technical breakdown within the order window. Okay, and so what we see here is there's an expectation that the USD will strengthen in the short term. And it looks like it's been trying to pull down the euro a bit. And as a short-term signal, that probably makes sense. But as we lead into kind of a larger macroeconomic decision right now in terms of economic policy, not just at the moment with will they cut the interest rate or not, as that decision comes in, but also what do they anticipate moving forward into next year, into the first quarter, second quarter? Are they anticipating more rate cuts? What's their view of the economy in the US, et cetera? That's what will come out in the press conference. And so many times that's what really moves the market more and causes maybe a longer term type movement. So I'm going to take an approach here with a technical breakdown. If we go to maybe a little bit larger candles, go to 1 day candles here, there's a support level here that I drew last week and earlier on that's still holding today. So on the larger candles, we see a support level right about here around 104.55 or so. And it has held since 2-3 weeks ago. We see it's tested once, twice. Resistance level up here held 2, 3, 4 times. Again, support level holding and going up. And so this has been going on for weeks, ranging between this area up here around 105.90 or so, almost 106, and down to 104.54 or so. And we're right near that support level on the 1 day candle. So I'm not going to argue that in the short term this might reach this take profit zone, and it looks like it's been trying to do that. But you have to be careful on short-term signals when you have an announcement that's so big that's coming in a couple hours. So many times the technical breakdown for short-term moves isn't necessarily considering the fact that there's huge news coming in an hour or two. Okay, so I'm gonna kind of ignore the short-term signal, and I'm looking at the larger support level down here on the 1 day candles. Now, if indeed the US cuts the interest rate today, which is expected that'll happen, typically cutting interest rates in the longer term weakens a currency. It doesn't strengthen, makes it cheaper to get, brings down interest rates on home loans, on car loans, on business loans. It allows more dollars then to be out into the economy, okay? And so that tends to drive prices up, right? Cutting interest rates is inflationary, which means it weakens the currency. You need more of them to buy any one thing if the value drops, if the interest rate drops, and that then drops the value of the currency. So in the short term, there could be the opposite reaction because of the game playing with short-term trading right before, right after announcements, the volatility. But when the smoke clears, this looks like a nice technical support level in terms of an opportunistic entry point. If you trust that the lowered interest rate will then be followed by a press conference, that maybe they'll allude to the fact that further rate cuts might be needed in the US. And that's really the expectation, is that this isn't the last rate cut out of the US in the coming months. They will likely talk about data-dependent future rate cuts only if the inflationary data shows that it's still not getting out of hand and that inflation is under control. This is the sort of thing that's probably expected in the press conference. Okay, that type of talk. So if investors believe that not only the rate cut happens today, but that there will be future rate cuts, we probably could see the euro gain on the US dollar with that type of fundamental news. So with trying to get the headwinds at our back to help with our technical analysis, then it might make sense if you feel like the FOMC committee will talk about future rate cuts and that might help weaken the US dollar, then you trust this one-day candle support level maybe even more. Okay, and let's assume that's the case. So then we're looking at a potential buy move. And you could go about this in a couple different ways. For kind of a medium range trade, I'm not talking trading for 2 hours, not short term, but also not necessarily for 2 weeks or 2 months, but for a couple day type trade, we can use AvaProtect. So what I can do is to get through the short term volatility, to say, listen, I know this might spike down as the news comes in today, so I don't want my stop loss just a little bit, 20, 30, 40 pips down where it gets hit and then it goes back up and I take the loss before it climbs. I'll do a risk management approach where I don't need a stop loss for the time that this trade is protected. So I can protect for up to a couple days, okay? And then I can do a trade size that allows me the cost of this protection to be the amount I'm willing to risk on a particular trade. So if I'm willing to risk, say, about 1% of my balance, and you can risk the amount that's right for you, but I'll make up a number of 1% of my balance I'm willing to risk per trade. So that would be about 590 on this particular balance that I'm using. So I could go larger than one lot then, 1.6 lots, risks, I'm almost perfect here, 591. Okay, my risk is the cost of the protection in the first 2 days. Okay, I don't have any other risk. When I use AvaProtect, it doesn't matter if it goes the wrong way by 1,000 pips. If I get stopped out, all of that loss is added back from the protection as long as those losses occurred during the protected time period. And once the protection ends, if the trade's still running, any negative floating is added to your account and the trade can then continue to run. All right, you can close it manually if you wish. So what I'll do is not put a stop loss starting out. I'll have profit potential up to wherever I want to let this run in the next couple of days, assuming it goes in the correct direction. And the most I can lose is this approximately 1% of my balance on the account right now. Okay, what would my profit be? And we can test this. If I put my take profit, I'm going to get rid of the stop loss for now. If I put my take profit up at this resistance level up here, so right around 105.90, without having to break the resistance that it had trouble breaking all these times, 105.90, let's see what the profit potential is to that point, is 1,860. So that's better than 3-to-1 ratio, potential profit to risk. So if I make a move like this 3 times and I win once, I break even. If I can win better than 33% of the time, then I'm profiting. And if I trust this support level from a technical perspective anyways, and I think the fundamental news might be on my side, I probably should be able to win better than 1 out of 3 with a strategy setup like this, okay? So you don't expect to win every time, but if you have a setup like this with an opportunistic support level, especially on one-day candles, these aren't 5-minute candles, this is a pretty long-standing support level. And if you feel like the wind is at your back with the fundamentals, then you combine the technical setup, which is opportunistic, much better potential profit than risk, with the support level closer and the resistance level further away, then you got the best of both worlds, both technically and fundamentally. So if I like that setup, then I'm ready to go. I make my move, I've got my buy trade in, and I'm in the market now. Now, what I hope is that they cut the interest rate as expected, or even greater than expected. And then at the same time, I hope the FOMC press conference, they talk about future rate cuts and the USD then weakens further, and this really helps this support level hold and the movement go back up like it's been doing. It's been ranging anyways between these two prices for a few weeks, okay? And so we're just hoping it continues that ranging, and we feel maybe that the fundamental news is on our side potentially here, but you never know. If they come out and don't lower the interest rate, then we could see this support level break. But that's a measured risk when you use AvaProtect. I can even wait a couple days before I give up on it because I have that much time with my protection. Okay. Any questions, comments? I'll pause for a moment in case you have any questions about AvaProtect, how it works, or the technical setup that we looked at here on the one-day candles. Okay, great. I don't see any questions coming in, so I must have been pretty clear. But I'll keep an eye out. If I see any questions pop up, I'll try to address them as we go. Okay, so we can follow the same routine here, really. If I look at something like maybe a commodity, we could look at something like copper. Copper's an interesting one. Why do I pick copper? Well, copper's used a lot in industry. There's some talk about, will the U.S., when Donald Trump is in place, put tariffs on China? A lot of the copper comes out of China. Maybe that could drive the cost of copper up. Also, the U.S. is looking at further tax cuts, deregulation, a lot of pro-business type policies with the Trump administration. And so this could help the demand for something like copper as well. If more businesses are being built, copper's used in a pretty large variety of products, and it could spur demand for it. So if I'm looking at copper and something like 1 week candles as a longer term move, I mean, it's bouncing today, which doesn't surprise me. Lower interest rates, again, help drive up the price of commodities. Why? Because it weakens the currency. The lower you bring down the interest rate, the money's easier and cheaper to get. So in theory anyways, that makes the cost of the currency less, and so thereby can serve to weaken the currency, which then allows the price to rise easier with commodities like copper, gold, etc. Okay, so we see this huge pull down of copper. So from an opportunistic perspective on the 1 week candles, technically speaking, it's very opportunistic. I'm just getting rid of some of these old lines down here. We don't need them. So clearly there's further room to drop. I mean, we see the price down here going into last year, okay, down around 3.6 even. So it's not like this big drop down to where it is now couldn't lend itself to further dropping. It could, but as we go to, say, 4 hour candles, we start to see, okay, here's a nice support level here. Okay, this is a price where it was hitting and going up several times and then bounced up. Okay, here's a pullback that got near this price line but didn't hit it. And so it looks like if you were thinking that, hey, copper could go running up with a weakening US dollar as they lower interest rates in the US, you could be looking at resistance levels up like this, where it was only a couple weeks ago. Okay, these are 4 hour candles. We only need to go back a week or two, and we're up at 4.3 and high. And we're down at 416 now. So that's a large number of points rise. If it just retraces what it dropped in the past week or two. And it looks like it's on its way to trying to do that. So this is already uptrending. We've got a stop loss that would be much shorter to get below this support level, and a take profit that would be much more opportunistic without having to break the high of the past week or two. And you'd still be able to take profit at a better take. So if we want to set this up, AvaProtect's not available on this, so we better use a stop loss if we're going to risk manage. Whoops, I accidentally bought it. Let's go back. Let me close that off. Okay, actually, I'll edit it. I'll show you what you can do. So if I come over here and edit the position, I want to put my stop loss down at a place that makes sense. So my stop loss, I wanted it below that support level of 4.09. So stop loss 4.08. I'll even go a little lower, maybe 0.05, just so I know I'm below that support level. And take profit we saw was up at, the resistance is up here at 432. So I'll go 430 even to take profit even before the resistance. Okay, so potential profit 8,400, risk only 6,600. Okay, and so you can see you have a much better potential profit compared to risk. And we even can get the stop loss up higher and still be well below the support level down here. So I can even go 410 or 408. And you see now it's about 2-to-1 ratio potential profit to risk when I set up the stop loss and the take profit. Okay. Now I don't like that trade size because it's a larger risk than I wanted. So I'm going to go ahead and close that right now because I accidentally hit buy with the wrong trade size. And now I could go ahead and reopen if I wish with a proper trade size for copper. But copper's an interesting one because of the China effect, the tariff effect that could potentially come if the U.S. starts hitting China with import tariffs, and also the pro-business, pro-growth deregulation, lower corporate taxes, etc., that could be coming in the U.S. So there's a lot of fundamental reason behind that technical move with copper that we just outlined. Arno, you're asking, is AvaProtect used a lot by traders with AvaTrade? And I would say in the right circumstances, yes. You usually, the way I see it, it's typically when you have some volatility that's coming that makes you less confident with your stop loss setting because you're afraid it'll get hit with the volatility and then it'll run the right way. You take the loss even on a move that goes the right way. So usually around times of large announcements, that type of volatility, but when you still have some certainty in your mind on directionality in the bigger picture, it's usually when I see AvaProtect maybe most useful for our traders. But yeah, there are a good number of traders that use it. It's a feature that you don't see at other brokers. So until our traders get comfortable with it, and until you've worked maybe with an account manager to help explain how it works, to make you understand the features and the limitations and the benefits of it, many traders don't use it because it's not something that's offered at other brokers. But as traders become comfortable with it and find ways to use it within their trading strategies, then I've seen it used quite often by a good percentage of traders. That's a good question, by the way. Okay, so what else besides copper, euro, USD? Another interesting one is USD Canadian. And if we want to take a look at the USD Canadian, we can take a look at this on the larger candles. If I go to, I don't know, 1 week or 1 month candles, I'll go to 1 month. We see something interesting here. Let me get rid of some of these lines down here so we don't distract. These are old price levels from past webinars. Okay, we see up here a resistance level, okay, on the 1 month candles. So it got in this area around 144, 145, and right back down. Okay, this was back 8 years ago. Okay, we're talking 8 years ago. Then about 4 years ago, it tried it again. It got above 145, 144, 145, and right back down. It just couldn't hold. Now here we go again. Okay, 1 month candles. So, maybe on a short-term move, this doesn't look like a nice spot to short because we're talking another 100 or 200 pips before it reaches 145 and change. But on a longer-term look, The closer this gets to 144, 145 area, it starts to look, technically speaking, like as long as you get your stop loss above these wicks up here, and the US is lowering interest rates, and the US is about to deregulate in terms of the energy industry to allow it to be easier to import oil from Canada through the XL pipeline that they're talking about restarting the build of that into the US, which is good for Canadian oil exports. Deregulation, allowing more crude to be processed and turned into oil and such within the US. There are a lot of fundamental factors as to why the USD in the bigger picture could repeat what we saw here 4 years ago and 8 years ago around this price range. Reasons for USD to weaken, interest rates being lowered in the near term and probably over the next year. And reason for the Canadian dollar to strengthen, maybe larger potential for crude oil exports into the US with the incoming administration in the US. A more pro-oil administration coming in soon. And just if you don't understand, the largest GDP export for Canada is crude oil. It affects their GDP the most of any product. So as crude oil goes, many times Canadian dollar goes. So this is something that I just noticed on the larger candles. Looks like a really nice setup. Maybe not yet, but in the bigger picture to keep an eye on, maybe put a pending order up around 145, wherever you think, technically speaking, you like the entry point, okay? That's for a longer term setup to maybe have a pending order somewhere that you might want to short later. I think the move might not get there because all of that is happening in real time right now. Rate cuts, deregulation soon in the US, etc. And so if you like the entry point now, you could be looking at a shorter term move without waiting for those high points to say, okay, I realize history shows this could go up to 145, but maybe I'll put my stop loss above the current high and see if this doesn't drop the way it is. And so if that's how I felt, I could simply do a technical setup where I say, okay, I'm going to short this. I'll put stop loss above today's high that it's falling down from now as we near the potential rate cut that's coming in an hour and a half or so. And so if I just go up a measured distance, maybe 25 pips, something like that, whatever your comfortable distance is for your stop loss for short-term moves, and I say, okay, stop loss at 143.60, okay, like 24, 25 pips up. So 143.60 to my stop loss, and then take profit. I could be looking at something a little further down, a support level down here, or I could go to larger candles because this is a larger macroeconomic move that could be occurring. Maybe I go to this first support level here. Okay, shorter term move, but a little longer distance than your typical short-term move because of what's driving potentially this movement, which is a large macroeconomic rate decision and FOMC statement that's coming. So 142.50 for take profit. As an example, I mean, you don't have to be exact with this, but now I'm looking at potential profit better than 2 to 1 compared to risk. Okay, and that's not that far down. It's only earlier this week that we were at this price level. Okay, we don't even have to break the first major support level. And so now I just need to adjust my trade size like I didn't do on copper before I accidentally clicked buy. Adjust my trade size before I set my trade in motion to be the level of risk that makes sense for me. Okay, so if I go to 2 lots on this, I'm looking at 452. If I want to be risking around 600, 2.5 lots, 563, okay, 2.6 lots. That's got me about there, about 1% of my balance. To go after, double that or more than double that. And so if I like the setup, then I'm ready to go on a short-term move. with the resistance level above and the support level below with our sell. Now, longer term perspective as a backup, you could have on that larger setup, in case USD for some reason goes running up further, remember on our 1 month candles, you could have a pending order up here around 144.7, 145. That's getting near where this reversed from 8 years ago and 4 years ago. Okay, so there might be something to, even if this drops and we win in the short term on this simulation for the USD Canadian sell, in the longer term, you still could be with a pending order up here. It doesn't cost you anything to put a pending order. You can put it here and just let it sit and see if it gets up there at some point. Maybe you wake up one morning and it triggered it, and then it went flying back down just like these did, and you fall into a great profit. Sometimes technical analysis can work that way. You lay trip lines in the market. It might not hit for the next week or 2 or 3, but at some point it might trip that trade at an opportunistic spot like this up here. Okay, so there's nothing wrong within the short term making a move in the opposite direction that you think it might go in the longer term at the same time. Okay, all right, everybody, thank you for joining. I think this is a good place to stop. To give you plenty of time to set up for the FOMC statement and rate decision that's coming. Any questions, comments before we end things this evening? Okay, great. Well, thank you all for attending and for the participation. Good luck with your trading this evening. If you're going to trade with those announcements that are coming in out of the US, I'll be back at it with another session tomorrow at 11 a.m. UK time, focusing more on the fundamentals, a little less on the technicals, okay? All right, everybody. Bye for now. Good luck with your trades.